Hey everyone, it's Justin here, America's Honest Tax Accountant from Number Crunch Nerds. So in this update, I want to revisit qualified versus non-qualified dividend entry in the personal tax planning template. So we're in the personal tax planning template. We're up here in the ordinary income section. We're going to start with this row right here, row number 12. Ordinary dividends use the dividend entry tab. Now, one of the things that I think is causing a little bit of confusion here is the term ordinary dividends. So we're going to change this description in this video to non-qualified dividends. Okay, so there we have it. Non-qualified dividends is what is going to go in this line in the ordinary income section. Because remember that non-qualified dividends are taxed at your ordinary income tax rates. And it is this section up here which ultimately sums up into this row. All of these items are ordinary income, and it's the number that is over here that will be subject to the ordinary income tax rates for all of these years going out into the future. Now, scrolling down a little bit into the long-term capital gains section, looking at this row right here, this is where qualified dividends are going to go. Now, you'll notice if I make the screen a little bit bigger that both of these say use the dividend entry tab here, and also it says it right here. So let's go over to the dividend entry tab and see what's going on there. So in this tab, we're going to have three sections: total ordinary dividends here, total qualified dividends down here, and then non-qualified dividends down here, which is a calculation. If I click on this cell right here, you can see that it is taking this number up here in the total ordinary dividends section. It's subtracting off the qualified dividends to ultimately get the number that is in the non-qualified dividend section here. And the reason we do that is because if I pull up a 1099 div, the information you're going to receive is called total ordinary dividends in box 1A and qualified dividends in box 1B. There is no box that says non-qualified dividends. In order to calculate non-qualified dividends, you have to take box 1A and subtract box 1B. And that's what we're doing right here. It says total ordinary dividends. Enter in this section what you expect to be in box 1A of Form 1099 Div or 1099 Consolidated. And then right here, total qualified dividends, enter in this section what you expect to be in box 1B of Form 1099 Div or 1099 Consolidated. And then again, the non-qualified dividend calculation, this is the difference between what's in the first section here and the second section right there. And then again, this number right here, the non-qualified dividend calculation, this is what will appear in the ordinary income section of the personal tax planning template, because this is the amount subject to the ordinary income tax rates. So in this example, we have 15,000 total ordinary dividends in account number 1 minus 6,000 total qualified dividends in account number 1, resulting in 9,000 non-qualified dividends in account number 1. And then we have 8,000 minus 2,500 equals 5,500 in account number 2. And so when we add those up, we have 14,500 of non-qualified dividends plus 8,500 of qualified dividends. And those are the numbers we're going to see right back over here. Non-qualified dividends of 14,500, qualified dividends of 8,500. And again, the reason that the qualified dividends are down here in the long-term capital gains section is because qualified dividends are taxed at the preferential capital gain tax rates. Now, if we go back over here to the dividend entry tab, I want to make a change to this description right here as well as this description down here. Over here at the end of this description, I'm going to type agrees to your Form 1040 tax return line 3B. And then down here at the end of this description, agrees to your Form 1040 tax return line 3A. So if we go over here to TurboTax and we take a look at a 1040, here is line 3B, total ordinary dividends, and right now we have 23,000, which agrees to the 23,000 that we have right here for 2023. And then here is line 3A, qualified dividends, which we have 8,500, and that agrees to the 8,500 that we have right over here. Now, what about this number, the 14,500? Well, the answer is that on page 1 of the 1040, there is no line that specifically shows that number. What the tax software does is it takes the total ordinary dividends, it subtracts off the qualified dividends, and then it taxes the difference, in this case $14,500, at the ordinary income tax rates. It also taxes the $8,500 in this example at the preferential capital gain tax rates. But there is no line, again, that actually shows the $14,500 up here on page 1 of the tax return. Now, when we go back over here to the main tab of the personal tax planning template, let's just walk through the tax calculation. So here is $100,000 of W-2 income for spouse 1 and $80,000 for spouse 2. And that agrees to our $180,000 total right over here in TurboTax. Now in our template, in order to subject this amount right here to our ordinary income tax rates, and this amount down here to our preferential long-term capital gain tax rates, we separate out the non-qualified dividends from the qualified dividends as we have been talking about. But in total, this is still $23,000. $14,500 plus $8,500 is $23,000. That's why when we get down here to our $203,000, it agrees to our $203,000 over here. Then as we continue to scroll down, there's our $203,000 of AGI, which agrees to the $203,000 over here. And the reason there's no difference between total income right here and then AGI right here is because for this particular example, we don't have any adjustments populated. Same thing over here, we don't have any adjustments populated in either lines 8 or 10. And then we have our standard deduction right here of 27.7, which agrees to our 27.7 over here, and then taxable income of 175,300, which agrees to our 175,300 there. And then scrolling down all the way to the bottom, when we get to our tax calculation, we have 28,586 in this example, which agrees to our 28,586 right there. So to summarize the entry, total ordinary dividends in this section should equal box 1A of the Form 1099 div, and it should also equal Form 1040 line 3B. And then total qualified dividends right here should equal box 1B of Form 1099 div, and it should also agree to your Form 1040 tax return line 3A. The difference between those two sections will be calculated right here. And then the number populated here will appear in the ordinary income section of the personal tax planning template. And the number populated right here will appear in the long-term capital gain section of the personal tax planning template. And this number right here will not appear on the face of the personal tax planning template right here. Instead, it will be broken out into the two components of the non-qualified dividends there and the qualified dividends here. Now, I have also gotten the question lately, do I have to use the dividend entry tab for these, or can I just type the amount of dividends in on these lines? And the answer is that you can do it either way. The reason that we have a dividend entry tab is because most people have more than one account that has dividends associated with it. It's very common to see people have 3, 4, 5, or more different accounts that have dividends associated with them. So you're going to have to add them up somewhere, and that is what the dividend entry tab is for. You type in box 1A from all of your different accounts right here, and it will summarize the total amount. Same thing for qualified dividends. And then it will bring the summary totals up here onto these lines, assuming that you have these linked appropriately to the dividend entry tab. This row right here, the non-qualified dividends, should be linked to row 41 of the dividend entry tab. And this row right here, the qualified dividends, should be linked to row 28 of the dividend entry tab, assuming that you want to use the dividend entry tab at all. Otherwise, you can just type in the numbers directly right here and right here. If you happen to be doing manual entry as part of your planning, like I was doing in this cell right here, because you can see that it is currently not linked to anything, all you have to do is highlight a column where it is linked, go to the bottom right-hand corner of the cell where you get the black plus sign, hold down your mouse button and just drag the formula out all the way to the end, just like that. And then when you go into these cells, you will see these are now linked to row 41. And then you follow the exact same procedure right here to link up this row to row 28 of the Dividend Entry tab. So that concludes this refresher on qualified versus non-qualified dividend entry in the personal tax planning template. If you're interested in getting further involved in tax planning and mapping out your Roth IRA conversion or other tax planning strategies side by side with me on the channel, the personal tax planning template is available for purchase in the link in the description below this video. Once you're inside the members area, make sure to check out video number 4 here, the deep dive into capital gain and qualified dividends, for even more information on the topic that we covered today. Also, if you're new to the channel, make sure to check out my currently 8-part Roth IRA conversion video series available on YouTube. There are links to that video series in the description below this video, or just search on YouTube for Number Crunch Nerds Roth IRA conversions. That's going to be it for today's update video. Thanks for watching, and I'll see you next time.